The Indian rupee is on the headlines. It fell to its record lows in the last two sessions and then suddenly stabilized, and now today it gained a bit. But what is with this fall and rise all of a sudden, and how does it impact you and the economy? And is this rupee fall really bad or good for you and the economy? Let me explain. Now, the Indian rupee fell to its all-time low of 88.33 against the dollar on Monday morning. Then it ended unchanged. Reports say that it was helped by a likely RBI intervention towards the later part of the session. On Tuesday, that is on September 2, the rupee opened 5 paise higher at 88.15. Overall, in August, rupee fell 0.7% and is weaker by 2.93% versus the dollar, making it the worst performer among Asian peers so far this year, and this is the biggest year-to-date fall in the last 3 years for this period. So first, let's understand why the rupee had fallen before. The first and major factor was US's new round of tariffs on Indian exports, which came into effect on August 27. 50% tariffs were imposed on India by the US, which is expected to shove off 60 to 80 basis points from the India's GDP growth. Experts say that the pressure on Indian exports raised concerns of a widening fiscal deficit. While the upcoming GST Council discussion and decision is expected to lend some support, clarity is yet to be given on the changes. Hence, the rupee is depreciating. Second is US dollar's rise. The US dollar is finding support ahead of key US inflation report. The Fed is also expected to cut rates next month. Third is the FIIs are consistently selling Indian stocks due to the tariff announcement by the US. Every sale translates to dollar demand, and this drags the rupee down further. So far till August in FY25, FIIs have offloaded over 1.6 lakh crore rupees from the Indian equities, driving ownership in the market to the lowest level in 15 years. So why did it gain suddenly? Well, reports suggest that it was due to likely RBI intervention, but this is not confirmed yet, but the reports are suggesting. So what is RBI intervention? So when the rupee falls too much or raises too much, RBI intervenes to keep the rupee stable according to the current scenario. So when the RBI sees that the rupee is depreciating too much, meaning the rupee's value against the dollar is falling, which is in this case too, RBI sells the US dollars that it has directly in the onshore spot market. This increases the dollar supply and strengthens the rupee. When the rupee is extremely appreciated and RBI thinks it is now the time that it should not be so high, it buys dollar to depreciate the value of rupee. But why would RBI want the rupee's value to be lesser? Well, because a falling rupee may also be good thing for the economy, but also has its disadvantages. First, let's talk about the bad things that happen when the rupee falls for you and for the markets. First, inflation rises. As India imports major commodities like crude oil, a weaker rupee makes these imports expensive. For example, you buy pens from the US. Say for $1, you got 2 pens from the US. And say earlier the value of rupee was 80 per dollar. So you paid 80 rupees for 2 pens. Now the value is 88 rupees per dollar. So now you pay 88 rupees for the same 2 pens. So the imports are getting expensive, which means consumers will pay more for the product, and that's inflation, which hits both your budget and the market. Second, obviously the imports get expensive, so raw materials are expensive and the consumer's purchasing power is slashed. Third, since the imports are now getting expensive, the trade deficit might widen or may increase if the import demand is still high. 4. The FIIs pull out of domestic and bond market, triggering the fall in rupee and markets. Fifth, Indian companies with debt denominated in foreign currencies may pay more in rupees to service their loans, which impacts the profitability and the stocks of those companies. Sixth, a weaker rupee also raises gold prices in India as gold is dollar denominated, making it more expensive for Indian buyers. So this is also one reason why the gold prices are now hitting record highs over 1 lakh rupee mark this week. For you, expensive groceries, expensive foreign trips, and you also pay more for studying abroad. But what are the advantages of falling rupee? Now, when the imports are getting expensive, the exports get cheaper if rupee's value is down. Let's take the same pen example, but this time you sell 2 pens for $1 to a US customer. So now he will pay you 88 rupees instead of earlier 80 rupees for the same product. So that's more profit for you as an exporter. So export-oriented sectors like pharma, auto, IT, gems and jewelry and others might gain in this case. Hence, the RBI has to keep a balance so that the exporters and importers both are not hurt and the economy is stable. So now what's next for the rupee? In near term, experts do not expect the pressure on the domestic currency to ease given that the tariffs are hitting the economy and the exporters hard. Some say that it might fall to a level of 90 per dollar, but in that case, the analysts are expecting that RBI might intervene. But some say that RBI might want the rupee to fall a little bit more because tariffs are already hitting the exporters and this might give them some relief. So there are conflicting statements coming from the analysts. So what's next to watch is RBI's action and the key US data that determines the future of the greenback. For more such news and views, keep watching ET Now.
If you like this video, then like, share and subscribe to ET Now.